China is poised to set a new record for its trade surplus this year, and that puts Beijing further at odds with some of the world's largest countries. The near record trade surplus also heightens the global trade imbalance and likely provokes President-elect Trump further. Now, the gap between China's exports and imports will reach about $1 trillion this year if the current rate of expansion is maintained in November and December. To put that into context, China's projected surplus will be equal to about half of the total GDP of Canada. The latest data shows that China's goods trade surplus reached a record high of $785 billion in the first 10 months, up over 16% from 2023. And that surplus so far this year was 12% above previous records in 2022. Exports to nearly 170 economies top what China buys from them. Brad Setzer, senior fellow at the Council on Foreign Relations, said that with Chinese export prices still falling, export volume growth was enormous. Setzer then added that the overall story is of an economy that is again growing off exports. China has been increasing its reliance on exports to boost growth and offset deflation worries at home. Several European and South American countries have already imposed tariffs on steel and electric cars imported from China. To add to the fears, Trump's second term could mean larger tariffs on Chinese imports. The reason? The US is the biggest component of China's trade surplus. The European Union and ASEAN nations are also running big deficits with China. In anticipation of further trade wars to come, foreign funds are already withdrawing from China. If the current trend continues, foreign direct investment or FDI in China would see its first annual drop since comparable data going back to 1990. The concern for China is that this fall in FDI comes even before Trump 2.0 policies take effect. For now, though, China is keeping fiscal stimulus up its sleeve in anticipation of the tariffs hit by the Trump administration.